Hey, what's going on YouTube? Welcome back. It's Travis here with JT Wealth. Hopefully everybody's enjoying your weekend. Today's video is going to be the 3 ETFs to buy and hold forever. And all 3 of these are specifically Vanguard ETFs. So let's get into it. Alright, like I said, welcome back. Thanks so much for checking out today's video. I do hope you're having a fantastic weekend, and this video fits well because the market's closed, so it's not anything you need to buy or sell today. But if you find value in today's video, please take 2 seconds out of your day, smash that like button for me, and consider subscribing to the channel as well. Now, if you've been following the channel for any amount of time, you know that both Julie and I are big dividend investors, but we also love ETFs. It really just simplifies the process for us. And a couple of the ETFs we're going to talk about today, we have been holding for a very long period of time. But when it comes to creating a Vanguard specific ETF portfolio, there was really one huge reason why we did that. And that is, if you're married and seeking to create a joint account, you simply can't do that with Robinhood, Webull, or any of the other super easy online on your phone apps out there. You need a big, solid, foundational financial organization like Vanguard. So over the last couple of weeks, we started our first official joint account with Vanguard, and as such really started to dig down deep into which 3 solid ETFs we were going to utilize from the Vanguard site. And those are the 3 that I'm going to share with you guys today. We're going to look at some specific metrics to each, talk about why we chose those, and then show you guys a little bit of a breakdown as far as comparison goes, because both the Vanguard site as well as other websites allow you to compare and contrast different ETFs and make sure they fit what your goals are. So there's a lot to cover. We're not going to waste any more of your time. Let's start with the very first ETF we were looking at in our new Vanguard portfolio. Alright, so the number 1 ETF we added to our portfolio is Vanguard Total Stock Market ETF, ticker symbol VTI. And right on the Vanguard website, you can see specific details about each ETF. So VTI seeks to track the performance of the U.S. Total Stock Index. It has large, mid, and small cap equity diversified across growth and value styles. It's a passively managed index sampling strategy. It has an expense ratio, which is important to check when you're looking into ETFs. You need to know how much money you're paying to utilize these ETFs. And with VTI, it's 0.03%, a very, very low expense ratio. As far as performance for VTI goes, you can see the average annual returns here as compared to the benchmark. It is pretty much dead set on par with the total stock market index, and that is what you're looking for. Now, as far as hypothetical growth goes, say you had invested $10,000 back in 2011 and utilized the VTI ETF, and only that for the last, 10 years, I guess that would be. Well, your $10,000 would have been over $42,000. Now, the specific characteristics of VTI, it holds 4,124 stocks, something you'd expect from a very diversified ETF that seeks to track the overall market. Its fund net assets is $1.3 trillion. Now, its top largest holdings, the top 10, account for 24.9% of the entire portfolio, and it only has 0.1% of foreign holdings. Here you can see its month-end 10 largest holdings as of the end of October, and you've got Microsoft, Apple, Google, Amazon, Tesla, really big companies in there. Okay, and now on to the second ETF we chose specifically from Vanguard, and that is VOO. VOO is the Vanguard S&P 500 ETF, and it invests in stocks in the S&P 500 index that represents 500 of the largest US companies. Now, its goal is to closely track the index's return, which is considered a gauge of the overall US stock returns. Now, it offers high potential for investor growth, share value growth, and falls more sharply than that of funds holding bonds. So it does have a risk ratio of 4 as far as Vanguard's concerned. So it does have a little bit of risk that goes along with that. Even though I didn't mention it, both VTI and VOO are both rated at a 4 risk on Vanguard's website. As far as the Etf Facts go, it is a domestic stock, large blend, and shares an expense ratio with VTI of 0.03%. Both very, very good expense ratios, all things considered. And this chart shows exactly why you want to be invested in the S&P 500. Since 1990, the S&P 500 has grown 1.19,000%. So no matter how much you're putting in, if you're investing in the S&P 500 over the long term, you might see some ebbs and flows, but the average will always be higher than whenever you started, assuming you hold for a long enough period. The VOO performance and average annual returns here, you can notice that it again is pretty much tracking on par with the S&P 500 benchmark index. On occasion, you might notice a couple decimal points lower, but again, I think that is accounting for those expense ratios, as it does tend to use up a little bit of your profit. Nothing too significant though. Hypothetical growth of $10,000, again, same as VTI, guys. That $10,000 over a 10-year period went from $10,000 to over $42,000. What you would expect of characteristics for the S&P 500 ETF, it has just about 500 stocks at 511 as of October 31st. Its fund total net assets are at $829 billion, with its 10 largest holdings making up 30.1%, and it has 0 foreign holdings. You'll notice a lot of the similar companies here as far as the top 10 from the VTI to the VOO, and we'll talk later about why I feel at least it's important to have both, even though they are so similar. All right, and the third Vanguard ETF that we like and we're going to add to our portfolio is VYM. And VYM is the Vanguard's High Dividend Yield ETF. Now this seeks to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. And it provides a really convenient way to track the performance of stocks that are forecasted to have above average dividend yields. Of note, this is the one with the highest expense ratio at 0.06%. As far as its performance goes, it is again on par with its benchmark, but here's where you'll notice a little bit of difference compared to VTI and VOO. Its hypothetical growth of that $10,000 is not nearly as high as what you had seen in VTI and VOO, although it is still significant. Over that 10-year period, your money has tripled. So you went from $10,000 to about $32,000. Down again from the S&P and the total index because it doesn't necessarily have the same growth potential. It really does focus more on value and dividends, as the name would suggest. There are 410 stocks in VYM, and it has a fund total net asset of $51.2 billion. The top 10 holdings again making up 23.6% of the portfolio, and it has 0 foreign holdings. Now, some of these companies are going to be very familiar to you guys, especially if you track dividends or watch our dividend focused videos. You got JP Morgan & Chase, Johnson & Johnson, Home Depot, Bank of America, Procter & Gamble, Exxon, Pfizer, Cisco, Comcast, Pepsi. These are all huge names in the dividend space. And like I said earlier, the main reason Julie and I decided to go with Vanguard is again so we could have a joint account, something we simply couldn't get with any of the other brokerages we were using. Now here's what my main portfolio page looks like inside the Vanguard site, and obviously I've blocked out my account numbers and certain names and things like that, but this is a brand new account that we just started this week, and obviously as such the value is pretty low at just over that $5,000 mark, but I just want to show you guys what it looks like and how easy it is to use. And when you actually click on your brokerage, it'll take you into the main page. Here you can see me and Julie's name for our joint brokerage account. You can see the total amount in there, and then you can see the different ETFs that you're invested in. Right now, again, VTI and VOO, we have yet to put money into VYM, but that is something we're going to do this week. So we have just started our portfolio. We're excited about it. We've isolated out the 3 main ETFs we want to focus on, and this allows us to do it very easily, very simply, and we are excited to continue to grow this joint account. But I mentioned we were going to show you guys how to compare and contrast the different ETFs, and you can do this with all of Vanguard's ETFs, and on other websites you can compare all sorts of ETFs, not just Vanguard's. So we're going to use it here and showcase VTI, VOO, and VYM and compare those so that you can see the differences between them, why you would use VTI and VOO when it doesn't necessarily seem to make sense on the surface. But I'm going to show you guys exactly why it makes sense here. Check it out. All right, so here you go right to the Vanguard site and just compare mutual funds or ETFs. And again, we did choose ETFs here, not mutual funds. But you can link them all just on that fund name. You select the fund name, put in whatever one you want to look at. Here we've got VTI, then VOO, then VYM, and it showcases that risk potential that I mentioned earlier, the 4s all across the board. It shows its expense ratios. 0.03 for both VTI and VOO, but 0.06 for VYM. So some just basic level information as well as the price. And as you scroll down, you can actually take a look at the average annual performance by quarter end for the year to date, 1 year, 3 year, 5 year, 10 year, since its inception. Whatever type of information you're looking for, you can get that. So we've got our VTI, VOO, VYMs here listed 1, 2, and 3, and you can just go down the list and say, okay, well, the 1 year for VTI was what? 32.04%. It was 29.96% for VOO and 31.47% for VYM. So there are going to be some differences here as you go through these specific ETFs and how much they grow year to date. If you go all the way down to the 10-year, it gets a lot more close-knit. You're at about 16.5, 16.6 for VTI and VOO, but it does drop a little bit here for VYM as it is a value and not a growth ETF. It's focused, again, on those dividends. Now, sometimes it's awkward to use the specific site, in this case Vanguard, to compare and contrast their own products. That really is what they are. Those ETFs are Vanguard products. They are making money by letting you guys invest in those products. So if you wanted to use an outside company to track and compare these different ETFs, there are companies out there for you to do that with. One of those is Etf.com. And here's just a quick image showcasing what etf.com looks like and their ETF comparison tool. You can literally just click on the green or the purple areas down below where I already have VTI and VOO selected. Select them and just say, compare, and it'll bring up all sorts of information for you to compare them. Most of the information, believe it or not, is identical to the Vanguard page. Maybe they're pulling from there. I'm not 100% sure, but at least it's an outside source to compare the information just in case you want something that isn't directly from Vanguard. Okay, and now what I'm going to do is showcase from a completely other website. This is not my information, so some of it doesn't even align with my personal choices. Like at the end, it's going to say, don't get VYM. And that's fine if you don't like VYM, if it doesn't fit your portfolio needs, that's fine. You don't have to invest in VYM at all. But for me, I like it. But this is basically a quick breakdown of the VTI, VOO, VYM schematic and the down and dirty on all the different stuff that goes on with these three ETFs. So this came from optimizedportfolio.com, and it was just a whole piece on VYM versus VOO and VTI. And basically it says, in a hurry, here are the highlights. So VYM, VOO, and VTI, they're all very popular stock funds from Vanguard, or ETFs. And the VYM tracks the high dividend yield. Again, we've already covered on what each one covers, so we're going to skip down a little bit. Now, VYM is solely a US large cap dividend stock. Again, all value, no growth. VOO is that large cap stock across both growth and value, and VTI is essentially VOO plus small and mid cap stocks. So again, this is highlighting why you would want to be invested in both VTI and VOO so that you can over diversify your portfolio, including some small and mid cap stocks in the mix. Now, VOO and VTI include REITs, whereas the dividend stock VYM does not, which might sound strange given the strong dividends provided by a lot of REITs. Now, VOO and VTI are much more diversified than VYM, and I think that is just standard across the board. They didn't have to choose companies that picked only high dividends, right? Now, VOO and VTI have significantly outperformed VYM if you go all the way back to its inception of 2006, that inception of course being VYM's. Now, in fairness, the value premium has suffered greatly over that time period, and what that means is people have been focusing more on growth and tech stocks and less on value stocks like the blue chips, the dividend earning companies, right? And we've all seen that happening over the last 10 years specifically, so that is no shocker there. But historical performance of VTI and VOO have been nearly identical. And now they are more popular and slightly cheaper than VYM, both in the price and the expense ratio. And again, like I said, it does say VYM is likely unsuitable as a core holding in a well-diversified investment portfolio. So this specific site definitely likes VTI, VOO over VYM, and that's perfectly fine. All right, guys, so there you have it. Those are the top 3 Vanguard ETFs we're going to buy and hold forever and continue to grow that joint account for our own retirement account. So hopefully you found some value in today's video. Take a look at these ETFs, see whether or not They fit your account portfolio preference, your risk profile, and as always, I'm not telling you guys to buy or sell anything at all. If you just completely avoid these 3 ETFs, that's perfectly fine with me. This was just provided for information, entertainment purposes only, and to show you guys exactly what it is we're doing with our money for complete transparency. Thanks again for checking out today's video. Remember, smash that like button for me, consider subscribing to the channel if you haven't already, and until next time, bottoms up.